finding new sources of income. South Africa's lockdown has proven to be a trying time financially, with many facing reduced work hours, possible retrenchment and uncertainty in their investment portfolios. But even during this instability, there are still opportunities to not only maintain your investment, but to become, to have them actually work for you and see some kind of progress in them. And we want to talk a little bit about that. Makwe Masilela, Chief Investment Officer and founder of Makwe Fund Managers, joining us now on the line. Dr. Makwe, good evening and thank you for your time. There are still opportunities there not only to maintain your investment, but to actually see progress in them.
By all means, and good evening to you. If you work this whole thing out, just to put this whole thing into perspective, the likes of investment, savings, stuff like that, it's not supposed, Thabo, to be like a flavor of the month. That should be our way of life, The whole thing of trying to pay off your debt, especially the ones which attract higher interest rates, your credit card, your overdraft, that should be our way of life. But if you look into our investments, just for 12 years, 12 months, or the whole year, you check the JSE, it's only down about 5%, and you check your rent is only down the same period, almost 20%, but gold is up 25%, and the likes of oil are only down 32%. And you check what has been doing well. It's mainly your gold shares. It's mainly what has been happening with the likes of your resources, which for that period over 12 months, just up resources 9%, where industrials are up only 6%. Then you ask yourself, is there still any value in these markets? Yes, especially when you look at your financials, because they're down a whopping 40% in that period.
Yeah. There are some financial advisors that who are giving their clients the option or the opportunity to forego making investment in their retirement funds for up to 6 months. Is that a good option? I believe if you are, for example, looking at such as direct investments like unit trusts, you can take a little bit of a break in your contributions. Is that a good idea?
Yeah, it can happen even with your retirement. Remember, if you stop paying, you're not forfeiting all what you've paid before, unlike your life cover. So yes, if you're not affording to pay, that retirement annuity will continue to be there, and worst of all, they'll continue to invest that money. So it's not a bad idea to be able to do that. But guys, you only do stuff like that if definitely you cannot afford to contribute towards that. But yes, it's not a bad idea to try to get some relief out of that, because the most important thing is that you are not going to be losing on that retirement annuity. That money will continue to be there, and that money will continue to grow if it's invested in stuff that has been growing in that particular period.
Yeah. There are those who are not only taking a break, but there are those who are digging into their investment savings, even their retirement annuity. What would you advise there?
The whole idea of investing, Thabo, is that in rainy days, you should be able to have a source. You should be able to tap into something. The most important thing is what is it that you're doing with that particular money if you tap into your savings? Because why are you saving? You're saving your money that one day when you need that money, what is going to be during retirement, or whether you need money for holiday or to extend your house, you should be able to have a source where you need to tap into. So we shouldn't have that narrative that it's a bad thing to do.
Now, when you're looking at what you need to be investing in going forward, is it time for people to be in touch with their financial advisors to have a review of their savings goals?
By all means, and I emphasize it shouldn't just be a flavor of the month. It is our way of life. You should be having a review now and then with a financial advisor. But yes, you need to look at things. You need to change your strategy where it need be. You need to have a clear understanding where things are going, so that you don't even get a heart attack when you see a day that the market is down. Take it, for instance, we saw on Monday the Chinese market, private investors, they've been into the market. The last time we've seen something like that, it was around 2015, where Chinese investors were borrowing money, getting into the markets. But all I'm trying to say, try to get away from this, and that is the flavor of the month. It should be our way of life. So yes, you should keep on having contact with our financial advisor, even after COVID.
A quick short answer from you, Dr. Makwe. How do I protect my investment during this pandemic? Many people worried about losses during this time.
It's always a question of diversification. It's not only during this time. As long as we are diversified, like we said, we've seen gold is up 25%. We've seen gold is up 25%. We've seen oil is down 32%. We've seen that our financials are down almost 40%. So someone with a diversified portfolio, they should be doing okay. But if maybe we're only exposed, say, to the likes of financials, then it means we're down 40%. And those who are like who've just been exposed to the likes of the gold stocks, then they're up nicely. So the whole idea, you should make sure that you continue to diversify. And we know in the markets we've got what we call a beta, meaning a risk which is systematic. You cannot diversify it. But some of this risk, you can be able to diversify it.